feel like BlackRock is kind of like this massive entity that everyone knows, right? And they think of in the traditional sense, and it's obviously gotten its feet wet in the crypto side of things too. And I'm sure Securitize has a lot of conversations with them. What are some things that you guys are talking about with them that would probably surprise listeners?
They're certainly embracing this asset class in a very, very real way. And I think being so publicly involved with the use of these products and the success they've had is just a real demonstration or showcasing that.
Mm-hmm. With BlackRock and KKR and all of these other ones that we mentioned, what is something that Securitize would like to do more of with them? Today's guest is Michael Sonnenshein, the Chief Operating Officer at Securitize. Securitize is focused on tokenizing real-world assets and bringing finance on-chain through tokenized funds, and has partnered with major asset managers like BlackRock, Apollo, Hamilton Lane, KKR, and so on. I'm excited to have Michael on the show today, and we've talked in the past before, or it was after you were the CEO of Grayscale in between jobs, and now you're at Securitize. So I feel like there is a lot for us to catch up on.
Yes, there is. Good to be here.
It's good to have you. Welcome.
Thank you.
To start off, I always ask my guests, can you tell us a little bit about yourself and how you got into the space? But maybe, how did you end up at Securitize?
Okay, two totally different questions there.
I know.
Okay.
We're going forward and back.
Okay, so we'll start back.
Okay.
So after my undergraduate degree, thought I was going to have a very linear path on Wall Street.
Mm-hmm.
I think I worked at 1, 2, 3 bulge bracket banks. All great experiences, all experiences I look back upon, I think, fondly.
Mm-hmm.
But I think at the end of working at the 3rd bulge bracket bank, I was starting to realize that the impact I was having day to day was just not cutting it for me. It wasn't moving our stock price. It was kind of being a small fish in a big pond. And I just started looking for something new. Make a very long story short, because we have a lot to get to. I actually ended up getting the job I ultimately took at Grayscale on LinkedIn.
Really?
Yes, really.
Did they reach out to you, or you just like easy applied?
No. I quick, easy applied. So this is like winter 2013, early 2014. I was just kind of desperate to do anything extroverted, right? Sales, IR, business development, go to market, any of that kind of stuff. And I guess I had applied to a role at the predecessor firm, Second Market.
Mm-hmm.
Someone from HR reached out and was like, hey, your resume looks great. Why don't you come in? And candidly, I almost didn't go on the interview because I had never heard of the company, and I worked at a big bank, and I was like, what is this going to look like on my resume?
Wow.
And lo and behold, I started off as an account executive, and a couple of years later, rose the ranks and became CEO of that business. So, hey, LinkedIn, you never know.
So the easy click works sometimes.
The easy click does work sometimes, yes. And actually, we at Securitize are currently recruiting for a couple open roles on LinkedIn. So
and you could click on it and apply.
Yes, and who knows? Maybe you'll become the next CEO of the Securitize.
That would be amazing. Yes. Yeah. I don't know. Carlos is doing good though.
He is doing a great job.
Yeah.
He is. To his credit, he's doing a great job.
Yeah.
So I think after the SEC battle at Grayscale, 10 plus years of what we originally set out to do, which was to bring a Bitcoin ETF to market. I was a little tired, a little burnt out, was ready to take some time off, spend some time with family. And then I think for me, when I saw the direction that the election was going, I said, Michael, you've been at this too long, personally, professionally. Your next chapter has to be back into the space. And I looked at a couple different things, but I think what was so great about Securitize was that it was a company that had enough product market fit and enough track record of success and runway left in the bank and things like that, that I knew I was joining something that had, really started itself off on a really good path.
Mm-hmm.
But I was also getting to it where it wasn't going to be so developed that I couldn't come in and also help shape and mold and grow and scale the business. And I joined Carlos and the team in December. And it's been awesome ever since.
It's been good.
Yeah.
Everyone's getting along?
Yes.
I'm kidding. Okay. Very cool.
Yeah.
What do you think is maybe the $1 trillion opportunity for tokenization? We've hit billion.
We've hit multi-billion.
Yeah. Billions and billions.
Billions and billions.
Yes.
So, I think when we take a big step back and we think about tokenization, right, it's really less so this kind of like utopian idea that everything needs to be tracked and, this glass of water should be on a blockchain and, all that. And maybe at some point, whether it's, operations or manufacturing or other reasons that these types of systems get used, the tokenization that we're focused on at Securitize is the tokenization of securities, right? And so largely our focus to date has been on things like treasury bills, private funds, things like that. But we've also started to experiment with things like public equities. And so in general, when we think about tokenizing securities, the more liquid something is, the more liquid the underlying investment is, the more frequent its valuation can be offered, the more frequent its ability to buy it and sell it or subscription redemptions tends to be the high level characteristics that make it the best candidate for tokenization. So a lot of folks, ourselves included now, are focused on figuring out ways to bring tokenized equities, tokenized securities, and public equities in a scalable way into the on-chain economy.
We've had guests on in the past who have talked to us about tokenization, but from your point of view, why do we even need to tokenize these types of assets?
Yeah, so we try not to tokenize for the sake of tokenizing, because that would be a really easy thing to do, right?
So you don't want to tokenize everything?
Well, I would say that Carlos and the team have built an amazing tech stack that predates my joining the company, and that does allow us to pretty much tokenize whatever we want, but we do try to hold ourselves to a higher standard as an industry and as a company and as a team, because we want to make sure that if we're bringing something on chain, there's got to be some objective value add. Is it better liquidity? Is it better terms? Is it lower minimums? Is it the ability to use that asset to access on-chain opportunities like DeFi or, just things that traditional rails don't offer. And so when we look at these opportunities, we want investors to know that if they're going to go through the added hoops of making an investment in an on-chain format, that there is some objective value add to them. And so far, the investor reception to that has been really positive, right? BUIDL's gotten to almost $3 billion in a little over a year, right? And we honestly just think we're just getting started.
We'll talk about BUIDL in a bit, but maybe on the state of tokenization as a whole, how do you look at the rest of the industry and how it's operating on that sector?
Well, it's different, having had the perspective I've been fortunate to have over the last 11, 12 years working in crypto. We have seen countless use cases come out of this industry from creators and innovators. It's been NFTs, it's been ordinals, it's been the metaverse, it's been ICOs, it's, you name it. And when I think about sequentially each of these innovations, in the years leading up to them, these weren't things we were talking about, right? And so that leads me to believe that today, sitting here talking with you, there's going to be all kinds of other innovations that happen within this ecosystem that we're not even thinking of yet, and new innovators will come and do. With tokenization, though, most people, I think, are comparing its growth to the growth of stablecoins, since so much of tokenization today has been focused on tokenized treasuries and other, kind of short-dated instruments. And if you look at the rate at which tokenized treasuries are growing compared to the early days of stablecoins, it's many, many, many multiples of it, probably 20x what early days of stablecoins were. What also makes this different than, I think, the growth of stablecoins is who's involved, right? In the earliest days of stablecoins, or even the earliest days of Bitcoin, it wasn't BlackRock, it wasn't Apollo, it wasn't Hamilton Lane, KKR, the clients of ours that you rattled off in the intro. And those are the types of household name, tier one asset managers that people know, that I think is lending itself to greater validity and actionability of the asset class. And that does make the entire thing different.
So tokenized securities and equities will be bigger than stablecoins?
I think that tokenized treasuries have the opportunity to ultimately be bigger than stablecoins. Yes, I do.
Okay. I also joked before about tokenizing everything. And I tweeted this a while ago where I was like, I don't think we need to tokenize everything. I actually think it dilutes the value of quality, liquid things that we're tokenizing on chain. I would argue you guys probably have the same stance.
Generally, we do. So I think a couple of weeks ago, I was speaking at a conference and I somewhat, I guess was being controversial and said, right now we don't see tokenization of real estate, for example. And you might agree with why I say that, right? What did I just say? I said generally the best, types of assets that are good for tokenization are super liquid, very frequent valuations, very frequent ability to buy and sell, things like that, those types of qualities and attributes. And so I said, I don't think real estate is really there. Do I think there are reasons to tokenize real estate in certain instances? Sure. Like what if you and I wanted to buy a piece of property together? We could, create some kind of smart contract or some token that governs your ownership versus my ownership versus 1,000 documents and things like that. Sure. But I may be starting to swallow my own words on this, because today I actually talked to one of the largest actually real estate investors in the world. And they actually started to show me, and much to my surprise, some products they offer which actually do have daily nabs, frequent buying and selling of the product, et cetera. And perhaps there are subcategories or products within the real estate space that could in fact be candidates for tokenization.
So you think it could be?
It could be.
Right.
But I think it's been less of a focus and certainly not as low-hanging an opportunity as things like treasuries, private funds, equities, things of that nature.
Did you push back on the call and tell them that?
No, actually, I actually led with the qualities and attributes that I just shared with you. And then they were like, well, now come to think of it, let me show you some of our other products that we maybe weren't thinking of, which may actually mirror the attributes you may want to see. So we'll see what happens.
Okay, fair enough. You've been in this space for a long time. And before you listed off a number of sectors from like ICOs to NFTs to now and the metaverse and tokenization and all these things, how do we stop this category from just becoming a buzzword and actually being something valuable beyond just like one market cycle? Obviously, it's been around. I'm not saying it just like existed, but it's doing extremely well. It's probably one of the most popular categories of this year or the market cycle that we're in. So how do you keep that alive?
I think we keep innovating, offering new products, drawing in additional ecosystems. When I think about our work at Securitize, we're continuing to bring new blockchains into the Securitize, platform. So that's helping us tap into new users and new distribution channels. We keep engaging with more product types. I think we're continuing to innovate both in the product wrapper, but as well as within the exposure that product offers. And so if we can continue to expand this universe and capture more hearts and minds and ultimately more wallets, I think that only adds to the number of people using tokenized securities. And again, it still feels super early for it. So, but there's always an impatience in crypto. Why isn't it happening faster?
Yeah, it should have happened yesterday.
Yeah, why is my grandmother not buying, their coffee with Bitcoin, right? Like that's just always been the case, but that's fine.
I also feel like the tokenization sector is largely institutions right now. Would you agree? Is that a fair?
When I think about our investor base across our products, a lot of them are, from the way that they're stipulated, the way they're created, designed purposefully for qualified purchasers, right? So these are entities that have at least $5 million in assets. We also do, however, have products that are also available to accredited investors, which is a lower definition, a lower standard, or lower threshold that investor may meet. However, a lot of the assets going into tokenized products or tokenized securities are coming from the on-chain investor. So it could be DAOs, it could be treasuries, it could be foundations, it could be just on-chain investors, right? Because again, they already have capital in this ecosystem, as opposed to the leap that investors will take and more are taking from traditional rails onto crypto rails to make these types of investments. And that's just a natural progression over time.
What do you think about the retail side of things, the non-accredited investors in the tokenization sector?
In general, there's opportunities to democratize access to certain products in an on-chain environment. I think unless you have certain types of relationships as an investor, you may already be sidelined from certain investor opportunities. And so when we talk to asset issuers, they believe that tokenization does open themselves up to new distribution channels, and that includes retail.
Would Securitize go down that route or no?
Well, in certain instances, products are available to retail, right? We tokenize the public stock of a company called Exodus, a crypto wallet that trades on the New York Stock Exchange. So if you're an Exodus holder, doesn't matter if you own 1 share or 1 million shares, you can transfer your shares between sitting in your brokerage account or sitting in your wallet, right? And I'd argue, that's a retail product in and of itself.
Fair enough. Okay. We briefly touched on stablecoins before, and I feel like a lot of times that's another very hot sector right now, which is kind of funny because I always just saw it as like a safe haven for people trading. But now there's yield opportunities. People see it as like a way to maybe bridge on chain, come in a regulated way. How do you guys think about it from your perspective and separate it from maybe the tokenization category?
Yeah, so stablecoins have played an extremely important role in the development of the crypto ecosystem. I'd argue they've been one of the most important and impactful innovations simply because they have allowed for the crypto investor, the crypto trader to have a stable form of value to allow whatever investments they're making to go back to a stable asset and not have to transfer back to traditional rails. And that in of itself has been massive, right? We've seen how often this industry has been banked and debanked and banked again and debanked again, right? And so the ability to be able to keep that value on chain has been tremendous. That being said, investors, I think, have had their eyes open to the fact that as much as they've been using stablecoins, if not in almost many or all cases, the yield associated with those stablecoins has not been shared back with them. And now that investors are in tune with that, they're looking for yield generating opportunities. And so whether there are new innovations around those stable like assets that can share yield, or investors are increasingly turning to yield bearing products like tokenized treasuries, where they can use those types of products to collateralize the same trades, but do so in a yield-bearing manner. That is an idea now that is not being, put back in the bottle, right? That's something that's out there and investors want. And I think you're going to start to see a change in investor behavior as a result of that.
How much yield are we talking?
Well, if you look at something like the BlackRock product, BIDL, that we support, you're talking about 4 and change percent. And, if someone found it on the street, they'd pick it up. So, people want it, right? Rather than just sitting in a stable, non-yield bearing asset.
No, for sure. Yeah, when it comes to tokenized treasuries, I feel like the asset class has grown extraordinarily over the past year. The BlackRock USD Institutional Digital Liquidity Fund, or BIDL, as you've been calling it. And we will call that for the rest of the episode because I'm not going to say it again. Very long title. It's been up for a little over a year, right? And it's grown significantly during that time frame too. I think at the time of recording, it had about $3 billion in asset value. What do you think is kind of driving the demand for BIDL? And then maybe we could go into tokenized treasuries as a whole.
Yeah, it really runs the gamut. So a couple of things. So one, I think that the BlackRock product has continued to be something that our team at Securitize and BlackRock have continued to iterate on and innovate on. I think it's been a great way for us to showcase some of the benefits of tokenization. So for example, when the product first was launched, it didn't have daily dividends, right? And now it does. Now, let's just think about that for 1 second. If you own a money market fund, or even if you just own treasuries directly, you get your dividend payments, like your interest payments, either monthly or quarterly, depending on the case. So the fact that we're able to, through tokenization, tokenized securities, be able to get investors access to that capital that much faster, here's one of those objective things that I was talking about earlier, where it's like, if we can offer investors an objectively better experience up front, then it is worth it for them to go through the additional hoops of making an on-chain investment, right? The same thing goes for liquidity. If you own a traditional money market fund, if you don't get your order in, usually by 2 p.m. Eastern on business days, you can't get out of the fund, right? You can't get back to cash. And then, you also have to take into account holidays, bank holidays, all the different things that cause these funds to be closed or not be able to liquidate them. On the contrary, something like BIDL has, 24/7 liquidity, right? There's always going to be off ramps there to get into stable coins, things like that. And so when you think about some of these features, the on-chain investor is looking at these and saying, why am I, supporting TradFi or TradRail investments when this is objectively so much better and the assets that I want to park in here are already on chain? So you're seeing adoption from a lot of foundations. You're seeing adoption from corporate balance sheets within the crypto space. Again, having that ability to have money on chain, yield bearing, and liquid when and where they want it has been huge. And then what I was starting to get at in the last question you asked me is for investors now, they're beginning to see, and I think you will see, and I'll have to come back and talk about this, see if this premonition is true, but you're going to start seeing tokenized treasury funds start to be offered alongside where stablecoins would normally be offered in trading environments. So that may be an OTC desk, a market maker, or even some of the largest crypto exchanges, where today stablecoins have been that kind of common denominator, which has been great and no one's arguing with it. But if you could have a yield bearing common denominator that's backed by the largest asset manager in the world and the full faith and credit of the US government, treasuries, that's a big differentiator. And so I think you're going to start to see investors begin to collateralize their trades more and more in each of these different settings using products like Biddle.
Are you guys building something like that?
Well, we built Biddle, right? And so working out partnerships to be able to, we've started to announce some of these, and it's certainly our hope that we will continue to see acceptance of this type of product in more trading venues, and again, as a contra asset to whatever people are trading in crypto.
Okay.
Yeah.
I feel like BlackRock is kind of like this massive entity that everyone knows, right? And they think of in the traditional sense, and it's obviously gotten its feet wet in the crypto side of things too. And I'm sure Securitize has a lot of conversations with them. What are some things that you guys are talking about with them that would probably surprise listeners? Remember trying to move your assets between chains, watching the minutes tick by, wondering if your transaction would make it? Yeah, we've all been there. But here's the thing. While other bridges feel like taking the scenic route, Across is your express lane. Base, Arbitrum, Optimism, boom, boom, boom. Your assets move between them faster than you could say cross-chain. Across isn't just another bridge. When Uniswap needed the fastest, most reliable way to move assets cross-chain, they chose Across. Now, millions of Uniswap users are swapping between chains without even thinking about it, because that's how it should be. Whether you're moving assets yourself or building the next big thing in crypto, Across makes cross-chain feel like the same chain. No more scenic routes, no more complexity, just 2-second transfers between chains. Ready to join the express lane? Head to across.to and experience what bridging should have been all along.
I don't think there's a lot that would surprise listeners. When I think about Larry Fink's, commentary and how extensively he wrote about the tokenization of everything in his investor letter this year, when I think about what BlackRock has done with Biddle, with Bitcoin ETFs, things like that, I mean, they're certainly embracing this asset class in a very, very real way. And I think being so publicly involved with the use of these products and the success they've had is just a real demonstration or showcasing of that.
With BlackRock and KKR and all of these other ones that we mentioned, what is something that Securitize would like to do more of with them?
I think more products. I think for a lot of them, their first products were probably more of like a MVP or kind of proof of concept. And in many cases, they've been surprised by just how fast the positive market reception has been. And now it's about continuing to talk to each of these asset issuers and figure out what the next product is. Is it different jurisdictions? Is it different exposure? Is it a different product wrapper? And I think that's exciting, because then we get to go back to the drawing board and in some instances get involved even earlier in the product structuring conversations with some of these folks.
Right. And with Biddle in mind, I saw on RWA.xyz that it has about 73 holders of that fund. How would you characterize who those people and or entities are?
Mostly crypto native. There's a couple of, I think, well-known scenarios there. So you do have folks that have issued stablecoins, for instance, that are 100% backed by Biddle. So like Athena's USDTB coin. You've seen other stablecoins also by Biddle. It could be stablecoins like Frax or others that have put a portion of their reserve in there. Corporations within the crypto ecosystem that just have stables or cash on their balance sheet and are looking for a safe, secure place to park it. And then probably foundations.
Nice.
Yeah.
What about non-crypto entities? Do you see them coming in anytime soon?
Starting to. I can think of some crypto and non-crypto entities that are starting to realize that there are certain instances when their ability to get back to cash or ability to get back to a stable asset is really important to them. And they're starting to see the benefits of having some portion of their balance sheet in an on-chain environment that's, liquid 24/7.
I also saw the recent announcement with Securitize regarding Apollo and the Acrid fund bringing it on-chain. Without getting too technical, maybe, why is this significant?
Yeah, so we launched this product. I'm trying to think. I joined in December, so this must have been like February or March, I think, that we launched with
quick.
Apollo. I know. So private credit has been a very important and hot area of investing on Wall Street as of recent. And working with Apollo, we decided that they had this multi-billion-dollar private credit fund. Why not figure out a way to bring that on chain? And so we launched with them. We launched on 6 public blockchains. And I think so far in just the first couple of months, the fund is up to, somewhere around $70-80 million of assets, which, in the grand scheme of asset raising isn't huge, but for a brand new product, we're really pleased with the market reception.
Why do you think private credit is a hot sector right now?
Well, so investors are looking for perpetually diversification. They can get that, 4.5%, 5% yield from treasuries, money market funds, things like that. And so they're starting to look, one standard deviation away, if you will, on the risk spectrum, right? Where they can continue to generate yield, but perhaps take on a little bit more risk. So it's things like private credit, where investors can start to do that. And again, it has the backing of a really high quality asset issuer that has an extensive track record, and within their fund diversifies, where they're deploying capital.
When it comes to risk appetite, what do you think is too risky right now for a lot of these institutions and funds?
In the on-chain economy?
Yeah.
I don't know.
I think it's different than like DeFi, but
yeah. Candidly, I don't know. I mean, you look at where institutional investors are allocating, whether it's the basis trade, or, beginning to move into areas like DeFi. I think that if anything, they're getting increasingly comfortable moving out the risk spectrum. I think if you rewind the clock 2-3 years and, we were in the depth of the crypto winter, these were not the kind of things that I think felt at all actionable for institutional investors. But now increasingly so, I think they are.
Okay. Interesting. There's also Converge, which is the chain that Securitize co-created with Athena.
Correct.
Right? And you brought up Athena before, and we actually had Guy on the show in the early days.
Nice.
Yeah, that was a fun one. But in terms of maybe the purpose of Converge, how do you see this kind of bringing more investors on chain? What's the opportunity here? Tell us.
Yeah, so the Athena team, Guy and everyone are folks we really respect. And, they have had a tremendous amount of success in a very short time. And I think that we view their product and engineering and especially their talent when it comes to DeFi and DeFi applications. And you kind of think about that combined with Securitize and the success we've had with tokenized securities and some of the asset issuers. We kind of felt that combining the efforts and qualities that our two organizations have could maybe result in the creation of a new chain that would serve as kind of the substrate for institutional DeFi, right? There are tremendous opportunities in the DeFi ecosystem, looping, lending, borrowing, you name it. And to date, I don't think that there's really been a framework that's been set up or really an ecosystem set up where institutions can permissibly and compliantly engage in DeFi activities. And we believe that on top of the Converge blockchain, we can hopefully achieve that. So early days for our project, I believe we're just hopefully a couple weeks away from testnet, and hopefully mainnet is sometime in Q3, but don't hold me to this. These things always end up taking longer than we want, but at least that's the goal. We think the opportunity is there. We think the appetite is there, and we're excited to build together. How
will Converge interact with other L1s and L2s out there that Securitize already works with?
Interoperably. So we work with Wormhole. So already today across the 9, 10 plus public blockchains that Securitize is integrated with, Wormhole facilitates interoperability across those chains. And we believe the same will be true with Converge.
Okay, very cool.
Yeah.
In terms of institutions integrating with DeFi, how do you see it coming in maybe a more regulated manner?
Well, here's I think the $1 million question is that, an investor's PII isn't publicly displayed on a blockchain, right? Your wallet address can be whitelisted, but without, the ability to identify that it's you or that it's me, ultimately, when you start transacting peer-to-peer, maybe that's okay. But when you start going into DeFi and into these larger pools where maybe not everyone is whitelisted or KYC'd or KYB'd, that becomes problematic. And so for us, one of the ways that, I think Securitize's model has been different is that we also own and operate a digital transfer agent. So there's always going to be the role of the transfer agent to act as that, source of truth, almost like checking, checks and balances against what happens on the public blockchains where we're issuing securities. And we think that until there are sufficient innovations within crypto where your PII is able to be relied upon, yet still private, that the transfer agent can play a really important role in users' ability to effectuate transactions in DeFi in a way that's compliant.
Okay. Very cool. I also saw that Securitize was invited to speak at the SEC Crypto Task Force Roundtable on tokenization.
Yeah.
Are you going?
I am not.
Okay.
Our fearless Chief Legal Officer, Jacquelyn, will be representing
Checks
Securitize.
Out. Yeah.
Yes.
Okay. Very cool.
Yes.
And what will they be talking about there? What's kind of like the game plan for you guys?
Oh, I don't know if we have enough time for that. No, the game plan is to, really talk about where we are and kind of leverage, hope that the crypto task force and this roundtable can really leverage the experience that Securitize has had over the past 7 years, bringing top quality, asset issuers onto public blockchains. We plan to talk about lessons learned, what we believe should be part of the frameworks, as, we would like to get ever more engagement with our regulators around this. And ultimately, as probably more business models try to innovate and bring tokenized securities online, where we believe that as in the short to medium term, where we believe those guardrails still need to be in place to protect investors and ensure that nothing is being done that's running afoul of existing securities rules and regulations, right? We believe that our regulators have been, continue to be, for the most part, technology agnostic. So when you think about what it is that we do at Securitize every day, we are simply just issuing securities, right? Which we're legally authorized to do as a broker dealer and sell securities. But rather than relying on a traditional kind of mainframe software that you might have at a bank or the DTCC, we're just using a public blockchain as the ledger that, records ownership and transfer of ownership. And so maintaining that posture from regulators, we think, is really important, right? They're there to protect investors, certainly not there to make, choices about what technologies are and aren't appropriate in the space.
Michael, you've obviously been in the space for a little while now, and you've also experienced probably a lot of ups and downs with the SEC, right? Yes. Is that a fair way to characterize it?
We've had some professional disagreements.
Right,
yes.
Right. Do you think, from your perspective, they've changed and turned a new leaf, or too soon to tell?
They have changed. They have changed. Publicly, you can look this up. I was down at the SEC a few weeks ago. It has changed. The reception is very different. I am optimistic that the ways in which the SEC is proactively engaging with our ecosystem and with our industry overall should be viewed by investors, ecosystem participants as a welcome change. The previous administrations kind of come in and, talk to us or come in and register, and then you really didn't have an ability. You could come in, but you couldn't really register.
But you couldn't leave.
Right. But, but you couldn't register.
Right.
I think now, those of you that are working on crypto projects, crypto adjacent projects, I'd encourage you, go in and share. They want to hear what people are doing, where they're innovating, where they're running into roadblocks, and what kind of guidance or additional clarity folks are looking for, because I do believe they really want to deliver on the administration's promise that the U.S. remains keeps its pulse on being the crypto hub of innovation globally. And this is an important part of it.
Right. That's a very optimistic change from probably the past.
It is. And it's almost jarring because it's been such a short period of time. But nonetheless, the proof will be in the pudding, I guess.
With all that said, where do you see the opportunity for Securitize to kind of capitalize on this better relationship and to kind of grow the industry?
Well, I think that's, again, kind of an important distinction about our approach to tokenized securities. Nothing that we do today, requires like a new piece of legislation or a new piece of regulation, rather. What we do fits within existing frameworks. Would we like to see, further advancements in just general legislation around crypto assets? Sure. But today we are continuing to forge ahead with the asset issuers we work with, innovating on product types and product structures. And, again, it feels early for us.
Mm-hmm. And then in the long term, maybe to kind of wrap things up, where do you see the biggest effect for tokenization? If you could look into the future, be like, yeah, we did that. What do you think it would be? I
think it's really globally connected marketplaces, right? I think even today, as infinitely more developed the crypto ecosystem has become in the decade plus that I've been involved, it's still fragmented, right? There's still certain concentrations of mining certain places. There's still concentrations of liquidity in certain places, or on certain venues or certain user behaviors in certain places. I believe that tokenization can actually act as, again, like kind of a common denominator that can bring assets across geographies, across time zones, across currencies, et cetera, and make the crypto ecosystem that much more globally connected. I think that's ultimately, one of the biggest outputs from it.
Okay, very cool. Last thing, Michael, what else are you paying attention to that you think others should be watching that we didn't talk about?
Oh, God. What else am I paying attention to? You said these weren't going to be tough questions. What else am I paying attention to? Well, I really cut my teeth in this industry around ETFs. And, to date, we really only have ETFs in the US, spot ETFs in the US market around Bitcoin and Ethereum. So I'm really curious to see what are the next crypto assets that become approved for ETFs and how the investor community digests those, what opportunities that unlocks, and ultimately what that does or doesn't do for the definition of digital asset versus digital securities. So it's going to be interesting over the next couple months. Yeah,
there's a lot of spot ETF filings across the assets.
Yes, there are.
Too many?
I don't know. It's not my bread and butter every day anymore. But yeah, from the sidelines, it does look like there are quite a few.
Fair enough.
Yeah.
Last thing, can you leave us with a piece of advice, something that you've carried with you throughout your time in this space?
Oh, God. This one has been resonating with me a lot recently because at Securitize, we're going through a growth spurt and hiring a lot. And I would just remind people that we and some of the best organizations in the world hire people. We don't hire resumes. And so when folks, feel that something's not the right fit and they're stick it out because they feel like it's going to look bad on their resume, like cut your losses and move on. It's probably not good for you and it's probably not good for the organization that you're working for. And I think kind of demystifying that for folks is important because a lot of folks will continue to take this leap from TradFi into crypto and maybe not be 100% sure of what awaits them on the other side. But we hire people. We don't hire resumes. And I think that's, an important posturing for us to have.
For sure. Everyone go apply to Securitize. You're about to get a bunch of applications.
Yes.
Amazing. Michael, thank you so much for coming in.
Thank you.